Hello, traders, and welcome to yet another episode whereby today we are going to go to the charts because we have covered so much bit of trading psychology. But again, it's worth it because, like I've always said, psychology plays a very huge role when it comes to in the financial markets and specifically the forex markets, which you are talking about. So today I want us to talk about London and New York trading strategies, strategy for the traders, whereby I'm going to share some nuggets here in terms of how to approach the markets. Because the sessions really matters a lot. Okay, so before I even share the charts, what you need to understand is that markets are bit more volatile in the London session and also the New York session, and especially during the overlap between the New York and the London and the New York overlap. Okay, so but even before we start looking at the strategy itself, why does session timing matters in the financial markets? And one of the reason you'll understand why these session matters, we have always talked about all one of the characteristics of FX is that it's the forex market is open 24/5, right? That's 24 hours, 5 days in a week. But you understand not all hours are equal in terms of trading, maybe probably in terms of volume, in terms of mostly volumes, not all hours are equal. So if you look at volatility, if you look at liquidity and institutional activities, they really vary so much when it comes to sessions. So you realize the volatility or the liquidity or the institutional activities in the Asian session will be different, will vary from those in London session and probably even the New York session. So for the traders, the key thing is to profit most when the volume meets momentum. And this is what I want to demystify today, right? So we have three major sessions or three major trading sessions. We have the Asian session, and one of the characteristics of the Asian session is that it's slow and range bound. Okay, it's slow and range bound, meaning that in the Asian session, when the market is opening, there is less volatility, and therefore sometimes we find the market consolidating during the Asian session. Then we have the London session, whereby we start seeing a high volume and major breakouts. So if you trade breakout and retest, London session becomes one of the best. Then in the New York session, now we have strong continuations, or probably we are going to witness what we call some reversal moves. Okay, so the key thing here, how with my experience in the financial markets, I would advise to focus on London and on London session and also the London and New York overlap for optimal trade setups. Okay, so if you look at, let's maybe probably narrow down the London session. Okay, let's narrow down the London session. So what we are seeing here in my screen, what you are seeing in my screen, this is the market. Okay, so this is the markets, and this is how we usually see the financial markets look like. Okay, so with these kind of markets, what you can see here, I have the Asian session, right? I have also the London session marked out, and I have the New York session marked out. So we have seen characteristics of the New York session, but again, the Asian session. But again, I would want to view these characteristics, to put a disclaimer that again, these characteristics, especially the consolidation in the Asian session or range bound, really varies depending on the instrument that you're trading. Okay, so for good, you realize that even in the Asian session, we have very smooth, very nice moves. All right, so when you talk about the London session, sharp volatility, all right, and the London session basically beginning from 3 a.m. all the way to about about 12 p.m. EST time. Okay, so you can convert that in the Kenyan time. Okay, so what are the characteristics of the London session? So one of the characteristics of the London session that is really significant is we usually see sharp price volatility after the Asian range. And this is whereby we start seeing the breakouts start happening. So like I said, if you are the person who trades the breakouts and retest, then this is one of the sessions that you could really consider. So there is also high activity because there is a high liquidity because of the increased volatility. And this is a session that we usually also see um, a lot of institutional orders. So a lot of institutions now start coming to play, taking out liquidities. That is the sweep of liquidities, the run on liquidities. So those are some of the key concepts that we have always discussed. Again, very critical when it comes into the financial market. So some of the common setups here in the London session, like I said, you want to do the breakout. Probably you can look at the reversals. Of course, after the breakouts, there is the continuation. Okay, so that is the breakout, retest, and continuation. Okay, so and some of the pairs to watch in the London session, we have pairs like GBP USD, Euro USD, USD CHF, maybe probably Euro JPY. So those pairs that are paired with GBP, Euro, and CHF, they are very active in the London session. So when we transition now to the New York session, so which begins 8 a.m. to 5 p.m. EST time, some of the characteristics of the New York session, we usually see market react to US New York session. Then we usually see some continuation of the trend, or probably a retracement of London moves. Okay, so we might see the continuation of the trend that was created in the London session, or sometimes we might be able to see some retracements of the London moves before we see the market pushing on the upper direction. Okay, or continuing with the trend. And sometimes you can also be able to get reversals, especially when the market creates the high of the day during the New York session. Okay, so and again, some of the pairs to really watch here, these are the USD pairs. So Euro USD again, GBP USD pairs, maybe gold. They are very active during the New York session. Okay, so then we have the London and the New York overlap, which is mostly 8 a.m. to 11 a.m., where we have the overlap EST time, right? So this time is in EST time. So, and why the overlap really matters is that there is highest volatility, right, and the day. Then we have institutional traders active in both regions. So that is the London and also the New York, right? So there are those taking profits. There are those also looking for entry opportunities. So this overlap is usually ideal for intraday breakouts and all continuation of the trend. Okay, so now having looked at that, it's also important now to look at how we can be able to employ a trading strategy that is going to help us understand how to look at these sessions. All right, so the first thing that you need to understand is um, when you look at the markets, because for me, like I said, the best sessions to trade is the London and New York overlap, and also now the New York session. So the first thing I want to do when I come into the markets, or the first thing that you want to do when you come to the markets, is to be able to identify where we have the Asian high. Of course, these indicator I've used here is able to show us, but I can be able to draw that. So that's where we have the Asian high, right? And then now I also need to mark the Asian low. Okay, so this is the Asian low. All right, the Asian high, and this is the Asian low. So as you can see, the Asian high and low, the price came here during the London session, and we saw the price take out those particular lows. So as the price pushes up, what you're able to identify here, the price is creating something what we call the double bottom. So you see this double bottom, which is where we have the second leg being shorter than the first leg. So this is usually one of the best patterns to look at for reversals. So and this is the pattern that the smart money concept look at when they are looking or trying to identify reversals in the market. Maybe I can draw it for you. So this is the first bottom. Then we have the price push there, come and create the second bottom, and now we see the price pushing higher. So it's usually another name is the W pattern. So once you see the valuation low, so the other thing that you need to identify now is where we have the neckline. So under this particular point, that's where we have our neckline. Okay, so you mark it and extend that particular neckline, right? So I'm able to see two things. So the first thing, once we mark the Asian high and the Asian low, what we need to do is to wait for the price. All right, we need to wait for liquidity sweep during early London. Okay, so sometimes it might not come during early London. So sometimes it can come during the overlap. Like we can see here, the London and the New York overlap. The sweep of liquidities here, or the run on liquidities, it came here, right, during the London session, early beginning of the London session. And then now, once we see that, what we need to do is to confirm a structure break. So here now we have a break of structure, right? We have a break of structure. These highs here, we have a break of structure. It can confirm a break of structure, right? So now once we have that, it's always good to enter the market on retracement. Okay, so this retracement elongates during the London and the New York overlap. Okay, so remember hubs. So the first thing we want to consider is we want to look at the what we call the discount and premium levels. All right, so you can see from this high to from this low to this high. So this level is where we have above this point is where we have the premium, and below this is where we have the discount. Remember, it's always good to look for buying opportunities in the discounted levels and to sell in the premium levels. All right, so now as you can see, the price came all the way to the premium, all right, to the discounted level, meaning that here we want to look for buying opportunities. All right, so how do we go about that, right? How do we go about that? So that is the biggest question in the room, how to go about that. So the first thing, maybe probably you can use the fib retracement and extension. All right, if you take your fib here and from the lowest to the highest level, so here we see the price retracing to the 0.618 optimal trade entry, because this is the optimal trade entry. And of course, if you're taking your trade from there, what it means is that you need to have your stop loss. You need to have your stop loss slightly. All right, you need to have your stop loss slightly below here. So that's your entry. So what it means is that you need to have your stop loss there, basically for the purpose of risk management. And of course, you are targeting these particular highs here, right? So that is one of the ways that you can be able to get these particular entry. So using the optimal W pattern. So the breakout of that of the neckline, then a retest of the same, right? That is the strategy number one that you need you can use basically to get some entries at these particular point, all right? So Apart from the fib retracement and extension, you can see this one is giving you a risk to reward ratio of 1 is to 3.22. Again, which is very much okay, very much advisable, because it's not really nice for you to look for trading setups or to take trading setups that have a risk to reward ratio of less than 1 is to 2. Right? So let's get back again here. Let me remove this. For those who do the smart money concept, you can see at this particular point, what we have here, we see the market taking out these liquidities. And if the market takes out these liquidities, then it means this level here, all right? It means this level here, okay? So this level here, it's our order block. You see this buy, the last, this is a buy candlestick. So this was the bullish bullish OB, okay? So actually you can use it like that, right? That particular level, okay? So this is where the price took out the BOS. So meaning that this one, all right, this buy candle here, where you see the engulfing, right, which also creates the engulfing, that's where we have the order block. Okay, so now our work, once the price has broken above that level, so what it means, we want splitting the price to sell from this level. Okay, we want splitting the price to sell from these levels, right? But the price came and broke above that particular point, so that now becomes the order block, all right, or the bullish um the bullish breaker block. Okay, okay. So but sometimes when you find because this is quite high big risk, about 1 or 2 pips, so and there is an engulfing here. So for me, what I do is I take this engulfing, because it's an engulfing that failed, right? So this is an engulfing, right? This is an engulfing. So after the price breaking above, it has to come back and probably retest this particular engulfing, right? But again, also, if you look at it this way, this is a bullish engulfing, meaning that when the price was retracing here, we were anticipating the price to continue pushing higher, but the price dropped all the way down to this level. So now the price has come above that engulfing, or the order block, as you may call it. So then if you extend, so this becomes a bullish breaker block, right? It becomes a bullish breaker block, and now again you have it as your entry. So the key thing here is to show you how to look at how to take your entries. So remember, what you have identified first is the Asian range, the Asian highs here, right, and the Asian lows here. Then we have waited for the price to take out the Asian highs, all right? Right, the price has taken out the Asian highs, so giving us a bullish sentiment. So we have to wait. Once the price has taken out the Asian liquidities or highs, we have to wait for a retracement, and this is the retracement that is happening during the London and New York overlap. Okay, so giving us an optimal opportunity to be able to take some trade setups. All right, so and there we have our very nice setup. Okay, so let's look at maybe probably another particular day. All right, let's look at probably another particular trading day. So remember, this is another trading day. All right, so we have seen the price do this kind of a thing. So we have our Asian high, right? We have our Asian high, and also we have our Asian low. Okay, so here I would want to put a disclaimer, because one thing that you might realize is, with all the strategies that you're using to trade, or irrespective of the strategies that you're using to trade, you need to realize that that strategy will not happen in the market all the time. Okay, it will not happen in the market all the time. So if you look at this particular day here, what do we have? So here we have the market doing what? Pushing on the downside. Already, it had given us here some signs of lower prices. Okay, it had given us here some signs of lower prices because of the change of character. So again, the market comes here during the London session, right? What do we see? So this, if you are marking the highs, this is the Asian high, all right? So that is the Asian high. Then we have the Asian low here. But now look at what the market did. It came, took out the highs, all right? Again came, took out the highs, but now going to the order block levels here. Before now, we saw the price pushing on the downside, right? Before we see the price to pushing on the downside. So what do I want to mean? Okay, let's look at it in this scenario. The market comes, takes out these highs, then it pushes on the downside. We have that slight push on the downside. Okay, so the key thing, if you look at this piece of price action here, we didn't have much volatility here because the London session seemed like the market is really consolidating at that particular point, right? So during this particular point, right, or during this trading session, the first thing that we see is the price taking out that. So the first thing that we see once this is taken out, so we regard this as our order block, right? Okay, so this is our order block. That is the bullish order block. So we anticipate, because here it has taken a BOS, so we anticipate the price to come down to this level. Then we look for buying opportunities. All right, but we will get there. So let's follow the price. So the price didn't during the London session. So again, at some point here, it created what? Not even there at this particular point. Once it has, because you are looking at the moment the price has taken out the Asian highs, all right? So it has taken out this Asian high, all right? So it has pushed down, all right, then pushed up again. So what we are seeing here is now this particular zone, okay? So this particular level, all right? So let me mark that. Do you see that level? Because the price has already taken out that liquidity, all right, the Asian liquidity. Then now you are getting a retracement. So one of their devices, the moment you see the price now do that, take out the Asian liquidity, start looking at the key points of interest that are below this particular point. And this is one of the key points of interest. So the price comes here at the first instance, okay? So for me, this particular level really at this particular point here, it would be really a good point to in terms of looking for buying opportunities here, because here as the price was pushing up, it created that a BOS. So a retracement to this point now, this being an order block, gives us an entry. The price pushes again, comes again to this particular point. Here we have a fair value gap, and we still have another entry, right, with this fair value gap, right? You can see that fair value gap. So if you missed this entry here, then you can be able to get this other entry, right? And this is at 8:20 a.m. That is during the New York kill zone, right? So we take that trade now. You can be able to take that trade and ride the market. So if you look at this, it's really a very nice entry, about 186 pips. If you had taken it from this particular level, right, when the market was coming back to this order block here, so meaning your entry was here, all the way to that point, you're talking about again almost 185 pips. Okay, so very significant, right? So let's look at another particular day. So this again is on another day. So we have the price open up, create the Asian lows, right? Create the Asian lows during that particular point. So the Asian lows are not taken out in this particular day. Then we see the price push up to take out the Asian highs, all right? So the moment the price pushes up to take the Asian highs, right? So what we want to look at is this level here. So for me, I will start marking my order blocks, right? Remember, as much as it's an order block, we're also talking about the breakout and retest, right? So here, as we have always said, the bodies of the candlesticks, they don't define, I mean, these candlesticks wicks here, they don't define the breakout. They don't either define the BOS, all right? So for me, I want the instance when the body closes above. And this is the point here when the body of the candlestick closes above this level. So now I can say that I have a BOS, right? Remember, never forget, we are first of all waiting for the Asian highs to be taken out or the Asian lows to be taken out, giving us the directional bias, suggesting that now we might be bullish. So what we are looking at is now this being taken out during the early London session. We are waiting for a retest, right? And for me, a retest will warrant, because of my trading strategy, in an order block. So I'll mark the order block. As it comes to retest this breakout, therefore I want an order block. And as you can see here, the price comes here to retest this level during the New York and the London overlap, right? So we have that, and then now also during a kill zone, and we see now the price pushing higher. So that tells you that this is your buying opportunity or your buying level, and from that point, targeting maybe probably the liquidities here, which because here we have equal highs, right? Here we have equal highs. So targeting those equal highs, that gives us a risk to reward ratio of 3.08, right? 3.08. Okay. So, and that becomes a very nice target, right? So let's even look at another example, the last one, so that you can be able to understand. So let's look at these last example here. For this time round, I want to look at a selling opportunity, because all the examples that we have looked at for buying. So let's look at examples for sales, right? So, but this is gold. You might not be able to see sales opportunity. Let me go even to another pair, because gold has really been bullish. Let me go to another pair, GBP, USD. So, all right, GBP, USD. Okay, because this strategy can be applied in all pairs. So you can see this example here. I just even bumped on it. So remember, this is the Asian high. All right, then this is the Asian low. Okay, so now once we have that, we see the price coming out during the London session to take out the Asian low. Then we have a retracement of this. So where is the price retracing to? Of course, we want to mark this particular point. This is where we had a BOS, right? So we had that BOS, the price pushing lower. Then at this particular point, we also have our order block, right? So you see that order block, the bearish order block, right? The bearish order block. So the price comes here and taps into this during the London kill zone, right? And we get our sell opportunity. So how do we want to align ourselves there? So here we will now have that particular sell opportunity, which is actually what they call the sniper entry, right? These are more sniper entry. So with that, I'll be targeting again these particular liquidities here. Okay, I'll be targeting those liquidities there, and you can push it that, and then now you have your very nice setup. Risk to reward ratio here, we're talking about 1:13, right? So you can be able to get very sniper entries with what I'm showing you, right? These are 2 pips. Of course, you cannot be able to have, sometimes it's not logic. Let's even say 10 pips stop loss, right? Just to be logic, okay? So let's know and cheat you that they do 2 pip stop loss, okay? Because sometimes it might vary because of the spreads, right? So with this one now, if you're using a risk, if you're risking now 10 pip stop loss, therefore what we are seeing here is a risk to reward ratio of 1:3.35. Okay, so as the price continues pushing down, of course you're taking partials and you're putting your stop loss at break even, and you can see how the price drops, right? So you get your very good trade. If you're looking up to all the way to these levels, this could be 5.0, about 1:5 risk to reward ratio. But again, sometimes it not be possible to ride the entire trade, because you just look at some probable levels like these liquidities, you use them as your target, right? So and there you have a very nice nice setup. Okay, so in summation, what I want you to do is, or in conclusion, what I want you to do is go and backtest this particular strategy that I'm showing you, how to look at the market. Um, Basically trying to look for some confluences. So first of all, you mark the Asian high and you mark the Asian low. So whichever is taken out first, you wait for a retracement. So if it's the Asian low is taken out first, so you wait for the price to retrace during the London session, and these Asian lows should be taken out during the London session, a little bit early during the early London session phase. Okay, so then now you wait for the retracement, and then you can use your confluences, whether supports and resistance, whether order block, whether engulfing, basically in terms of looking for a trading opportunity. You can also even use the Fibonacci retracement and extension levels, right? So then you take your setup, right? So meaning for this one, because the lows were taken out, Asian lows being taken out, we look for sell setup. Asian high being taken out, we look for buying setup. But there is a cushion. Like I always say, this strategy will not, there is no strategy that will work on Monday to Monday. All right. You realize that if you're following just one strategy, then you might have like maybe probably 3 to 4 setups in a week, right? 2 to 3, at most 4 setups in a week. Sometimes they can be favorable, and each day there is a setup that is showing up, right? So let me do this last example, right? So basically to make it sync. So here we have the London high, the Asian high, sorry, then here we have the Asian low. So the price comes during early London session and takes out those liquidities. So for us, what are we looking at? For us, we are looking at some selling opportunity, because the price has already given us a probable buyers to be able to look at. So here you can be able to take, first of all, you can take the Fibonacci. So you mark the Fibonacci retracement and extension levels. So the price comes here during 610. So 610 for me, according to my strategy, is not the best time to look at entries, because it's outside the kill zone. So I want to wait maybe probably during the New York kill zone. And you can see the price coming again to these levels during the New York kill zone. And this gives us some buyers, yes, or some selling opportunities, okay, because this is during the New York session, right? During the New York session, we see that particular level, the price respecting these particular point, okay, and then we get the sell. But now I want you to look at the price different here. So here we had a probable double W pattern. All right. Remember, I talked about the smart money reversal pattern. We want to see the second leg being shorter than the first leg. But here, we are seeing the second leg being longer than the first leg. So meaning it's not really that much high probable. So, and the reason why you see when the price comes here, so when I see this kind, I'm not really much enticed or much convinced that there is a reversal. So we see the price pushing up, then comes here. So instead of retesting this level, what we see is the price breaking below, right? And then now after some time, during now these, once it has taken out this, remember this was the previous day. So once it has taken out the Asian lows of this day, the price comes all the way to this particular point, retesting this. So this is adding some confluences or spicing up your charts, right? So then after that, we see the price drop. Okay, so you can look for your entries here. You can use maybe probably for those who trade the fair value gaps, or maybe probably for those who trade here also you can see there is a sweep on liquidity. So the price did that, and so many ways you can be able to look at your trade setup. All right, so like on this particular point here, you may consider these actually being a BOS. here. So the price breaking this particular order block there and retesting. So this is another entry that you could have taken, right? Because now with this being taken out, the Asian lows being taken out, it is giving us a bearish bias, all right? So, and the reason why you see at these levels, we see the price respecting here. All right, so we see the price pushing up above, these are currency pair. So, but we see some reactions of prices here. So the moment now we see the price break that level and then a retest of the same, therefore you can take our selling opportunity, and you can see how the price drop. So if you are taking your sales from here, we are targeting these liquidity. If you are taking your sales from here, also we are targeting these major liquidities here. All right. So, ladies and gentlemen, it's very simple, as you can see. So the key thing is to be able to understand the trend. Look at the Asian high, the Asian low, that is the Asian range, which is able to give us now, once we have the breakout, it's able to give us like the directional bias of that particular day, and therefore we are able to align ourselves accordingly. So risk management tips, it's very important irrespective of the strategy. So always, even if you are using this strategy or irrespective of the strategy that you are using, never risk more than 1 to 2% of your account per trade. Again, it's good to avoid over trading during the session overlap, because sometimes most of the people tends to do a lot of over trading, maybe probably looking at different currencies, maybe GU and the Euro USD. Sometimes they are positively correlated, so whatever GU is doing, Euro USD might be doing the same thing. So it's always good to avoid that over trading, because again, there is that waking of the adrenaline that comes up because of the volatility that comes into place during that particular time. So also it's important to use these session based stop loss. That is below or above the structure, right? So below or above the structure, but again, taking note of not risking more than 2% of your account. All right. So and sometimes also, even as I wind up, it's also good to look at it in terms of some mistakes that people use when trading this strategy. So you find there are people who trade before liquidity sweep confirmation. So they don't want to wait the Asian lows to be taken out or the Asian highs to be taken out. So they enter trade out of form or fear of missing out. So it's always good to wait for either the Asian high to be taken out or the Asian low to be taken out. Then you wait for the retracement, and then you look at the price coming to your key point of interest to be able to take a trade. So again, never ignore the economic calendar events, because the reason why we have the Forex Factory is for us to be able to track how the price, the events that we are looking at. And we all know that sometimes these events, they can either propel the trade to go into our direction, or sometimes they can reverse the structure. So they can either support the structure, or sometimes we can have reversals. So what I mean is, supporting the structure is continuation of the trend. So they might support the continuation of the trend, or sometimes they might cause reversals in the market. So it's also good to avoid the chasing moves late in the session, right? So don't try to chase those moves late in the session. So you are looking at them, especially the Asian highs and lows being taken out. We want them to be taken out in early London session, right? So never chase those moves in the later session, right? Also, again, it's good to avoid trading during low volume transition hours. All right, like maybe probably 12 midday. All right, so that time, Kenyan time, 12 p.m. is not really the best time. We have a low trading volume. So again, the reason why I align myself with ICT kill zone is because during those kill zones, there is high trading volume, and therefore meaning that there is a lot of volatility, liquidity, and the markets are favorable. Okay. So I believe you learned one or two things that will be able to help you to look at the prices differently. So if you did, make sure you comment in the chat. If you have any question, put the comments in the chat. I'll be able to answer you. Any strategy that you want me to do or to look for you, to teach you, put it in the chats, and I'll be able to do a video on the same. So thank you so much, and see you in the next one.